Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman, and thank you to all of you for coming before us today. Mr. Theodora, I'm curious, how long have you studied or participated in the insurance market reviews?
I've been an analyst of the property casualty insurance industry for 15 years, 12 years at Conning, an insurance research and asset management firm in Hartford, and for the last 3 years, leading the insurance research at R Street. Prior to that, I was in the industry. I worked in the industry as an underwriter and in other capacities.
Just curious, I was first licensed in the insurance. I was first licensed to sell insurance as an agent in South Dakota in 1978 for homeowners insurance, and carried that license all the way up until 2015 when I was elected to the United States Senate. Just curious, during that time period, you learn what's in a policy and what's not in a policy. And under a homeowner's policy, there was an old HO2 form, and it was transferred into an HO3 form where you had named perils, and then you had special all-risk coverage with exceptions built in. But I was trying to think back. I don't believe I've ever seen a homeowner's policy which was available with a flood insurance as part of the original perils. Are you aware of a flood insurance or a homeowner's policy that started out under the basic forms with flood insurance?
No. Flood has been excluded for several decades prior to the 1970s when you began. The HO3, which is the most common form,
Special form,
excludes flood. The flood insurance program, National Flood Insurance Program, has been the principal provider of flood insurance. The good news is that the private market is growing. I'm going to bring some good news in here. Now there's 77 private companies that are writing 31% of flood insurance business compared to 12.6% just a few years ago. So the private market is starting to come in, especially since the new rating methodology has been introduced.
I think also right now we have an NFIP, the National Flood Insurance Program, which is a backstop for flood insurance across the country. And I think it's very important that we get it renewed. I think it's an important aspect for a lot of areas, particularly where the risk is high. But the vast majority of Americans, they simply look at their policy and they say, I don't need flood insurance because I'm not in a flood insurance flood-prone, or an area which is prone to flood, so they don't buy it, or their mortgagee does not require them to buy it. So what you end up with is in many cases, and the folks who would buy it are the people that think they may have a loss or are being required because the federal government believes they may be in a flood program or in a flood zone. Correct?
That's right. So, and that leads to two problems. One, you have adverse selection, which means that the policies that are written are the ones with the perceived highest risk. They're next to a river or a creek or on the coast. And you have low penetration. There's 70 million homes in the United States. Only 5 million carry flood insurance. And it's estimated that over 80% of homes in the United States are exposed to flood. As we've seen the last couple of years, we have these atmospheric rivers, these rainstorms that are horrific and violent, that are removed from bodies of water. So the flood exposure is there, the market is underpenetrated, and there's adverse selection.
You know, we represented dozens of insurance companies that wrote homeowners in the agencies that I've had an ownership interest in South Dakota. I found them that they either wanted to be in the market and they wanted to be writing a lot of insurance coverages. They didn't want to write one or two, they wanted to write lots because they made a profit if they had a larger part of the market itself. The vast majority of insurance carriers would love to write for a particular line of coverage if they thought they could make a profit. Fair enough?
That's absolutely right. So the exodus from California is, as Ranking Member Scott said, law of economics. If you're losing money, there's no reason to go on doing that.
So in this particular case, if we recognize that there are certain areas around the country where carriers have simply said, look, we can't make a profit there, we're on our way out. Mitigating circumstances, climate change is part of it. Being able to appropriately increase your rates for the risk of some of those severe weather events If they're not able to increase rates based upon that, then they simply look at it and say, we're a for-profit organization, we can't make a profit. But there seems to be a movement out there still where people think that we should spread that out to taxpayers to pick up those losses and keep the rates low. Is that a fair assessment of what some folks think is a better alternative?
Yeah, that would socialize the risk and penalize people unnecessarily and allow people that have got higher risk to go on having that higher risk.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator Rounds.